What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video on today's stock market where the Dow tumbles nearly 700 points as strong job market reports cast doubt over Fed's rate cut path for 2025. So let's get into what happened today in the stock market, which wasn't pretty. So stocks dropped on Friday after a hot jobs report dampened Wall Street's expectations for more interest rate cuts from the Federal Reserve this year. The Dow Jones Industrial Average lost 696.75 points, or 1.63%, to close at 41,938.45 points. The S&P 500 slid 1.54% to 5,827.04, while the NASDAQ Composite fell 1.63% to 19,161.63. So Friday losses pushed the major benchmarks into the red for 2025. U.S. payrolls grew by 256,000 in December, while economics polled by Dow Jones expected to see an increase of 155,000. The unemployment rate, which was projected to remain at 4.2%, fell to 4.1% during the month. The yield on the 10-year Treasury note spiked to its highest level since late 2023 after the report. So good news for the economy, but not for the market, at least for now, said Wells Fargo Investment Institute senior global market strategist Scott Wren. However, this unexpected gain relative to the consensus projection does not change our view that the labor market is likely to decelerate further in coming quarters. So traders gave 97% odds that the Fed stand pat on rates at its meeting later in January, and they now think the central bank will hold rates where they are in the March meeting as well, based on Fed funds futures trading. So odds of a March cut fell around 25% following the jobs data. So they're saying rates won't happen in January, and when they meet again in March, right? And this is all according to the CME Fed Watch tool. Look up the CME Fed Watch tool. So the Fed cut its benchmark rate by a quarter point in December. So stocks took another leg lower on Friday after the University of Michigan's Consumer Sentiment Index signaled concern on the inflation front. The overall index came in at 73.2 for January, missing a Dow Jones estimate of 74. Part of that was driven by one-year inflation expectations rising 3.3% from 2.8%. Just a small amount, and that affects everything. So 5-year expectations also scaled to their highest level since June 2008. So growth stocks that could be hurt the most if a spike in rate causes investors to get more conservative led the session's losses. Nvidia shed 3%, another loss. AMD and Broadcom lost 4.8%, that's big, and 2.2% respectively. Palantir was off more than 1%. Small cap stocks, also sensitive to borrowing rates, dropped, with the Russell 2000 index losing more than 2%. So rates are moving a little bit too much, too fast, and equity markets are selling off. LPL Financial Chief Technical Strategist Adam Turnquist said, adding that the recent move in yield foreshadows a potential pullback or correction for the S&P 500. So all they're saying is people are taking money back. So sometimes this happens in the market. Be aware of that. When these drops happen, when the market goes down, corrections happen. It happens since the market was created. These pullbacks happen. Market crashes happen. It does not mean you do not have to invest or need to invest. The choice is yours. So, but the most important thing that gets lost on days like today is the message on why rates are moving higher. It's because the economy is doing better than expected, right? Unfortunately, well, ultimately, that means the potential for better earnings, less risk of a recession, and that's really going to dictate longer term returns versus a sell-off in today's market. So all three of the major averages posted back-to-back weekly losses, with the S&P 500 off 1.9%, the NASDAQ down 2.3%. Wow. The 30 stock Dow slid nearly 1.9% on the week. Yeah, stocks are down. The market's down. The job data, all this stuff or information that comes out to give us updates on the job market, on interest rates, it affects the market. It happens all the time. It's nothing to be scared of. And remember, there is no true way in timing the market that benefits you. You have to be in the market. Do not ever try to time the market. Invest in the market, as often as you can, monthly, bi-weekly, weekly, however you choose to do so, with your budget. Invest in the market. The market can be down for the next 2 months, and then the remaining months in the year, it could be bullish. It could go up. You never know. So just wanted to put that out there. So let's see what happened to some of the stocks. Meta actually went up. So that's not a bad thing. Meta went up $5 today, $5.14. SPLG, my S&P 500 ETF, is down $1.03, closing out at $68.30. Microsoft down $5.61, closing out at $418.95. Nvidia lost $4.20, closing out at $135.91. AMD lost $5.80 today, closing out at $116.04. Palantir lost 97 cents, closing out at $67.26. Now remember, in the article, it mentioned specifically Nvidia, AMD, and Palantir. These are great stocks. These are great companies. They have a lot to do with securities, AI chip making. So Warren Buffett always says, buy the dip. The fact that these stocks are lower in price is actually pretty good when they're good companies. Nvidia just gave the keynote speech at CES 2025 in Las Vegas about all the partnerships that the company has created and all the things that it has in the works moving into the future. So the fact that the price is lower, it's actually a good time to buy. So yeah, that's all I'm going to discuss today. Short and sweet. Yeah, either way, continue to lower your debt to income ratio, invest into your future, your 401k account, create your own business, do whatever needs to be done, bring in more income, to invest into your future, to create generational wealth, to pass on to your family. Yeah, we all can do it. We all will do it. That's why we're listening to videos like these and we're paying attention to the market. So yeah, you guys have a blessed weekend. Continue to do what you're doing. Continue to think positively. Have a blessed weekend. All right, peace.